What is up, everybody? Logan coming at you guys with another video today, and we added up a couple of wins since the last video. I really appreciate all the support as always. If you guys are yet to sub to the channel, it would mean a lot if you guys left a like and a sub at the moment. I can't thank you guys enough for almost getting us to 13,000 subs, which is incredible. We'll go over a couple trades today. I did want to say we'll be at the Rocket Mortgage Classic on Saturday in one of the suites if you guys want to stop by and say hi if you're going to be at that golf event. It's been really fun to watch so far in television, and I'm excited to be there and be there on Saturday. So today's Friday. The stock market closes in about an hour and a half. And I was just going to walk you guys through some of the trades, some of the mindset I had this week, because this week was actually really tough, right? If you're on the wrong side of the trade, you're going to hit. You're going to get hit. I think a lot of people I've seen today who had call credit spreads on this week are just getting steamrolled. We are up to 44.52, which means I'm going to lean to the call credit side here for a little bit, just as we get a little bit more extended and see a lot of this FOMO, right? Here's those 4 green days in a row. That's going to lead to more sideways to generally, slightly downward after you have those 3 to 5 days up. Right? The market likes to flip back and forth like that. So taking a look at where we are overall and where the VIX is, right? I've shown you guys the VIX. We're at 13, just non-existent premium out there. So you might have to go a couple further, a couple more days out, a little further. It's hard to do these 0 DTEs, but if we do go back to the checklist that I've been using for the 1 DTEs and more multi-day as well, I mentioned these major supports last week, and we actually popped off of all of them, right? And the ES is just flying up. We had that pullback earlier last week where the S&P went down to 43.30 on Monday near close, and we have pretty much just steadily increased since then. And actually, if you go back to the 26th, which is when I look forward to my trades around that 2:30 time, if you guys would like to come trade with us, the link is down below in the description. And I am running a deal right now for July 4th. For anybody who signs up this weekend, you can send me a message on Gmail down in the description or through Discord if you do sign up. For 3 months, if you sign up for 3 months, it's $80 a month instead of 100. So we slapped down this 1 DTE. It would have expired worthless, but I did roll it to the next day for that 15-cent credit. Pushed it up. The market did pull down, and we were able to take that trade off and let it expire. And then I mentioned with the market being red, we did slap this trade on. We actually grabbed 6.5% on this return on collateral, which was nice. And my thesis was, well, we're pretty much due to stay sideways. The next day we were completely sideways, and then today's just been a massive ripping day. So that was a 2 DTE, and I'm actually going to start looking for my trade here in the next few minutes. So I just wanted to give you guys a quick little update. If we go back through that 0 DTE checklist, that 1 DTE, that little short term, if you're a short term options trader and like to sell premium, right? Most people who buy options don't stay in the game very long. And yeah, there are so many times where some guy will take $5 like I got right here, right? This $5 bill, and they'll take it and turn it into $1,000 because they found the stock that they had puts on, and then it gets a lawsuit and loses 50% of the value. But I didn't say extreme cases. I said most option buyers will quit and they will lose money. Most. So unless you think you're not most, which you're probably wrong if you think that, even someone who's experienced at trading, has their head on their shoulders about it as me, I can almost guarantee you if I went back to the options buying space, I would become a losing trader. So I'm just talking about people like the short-term options sell at this moment. And here are my main steps for it. And Rykor has been very helpful, and he's one of the more easygoing people that I've come across in the trading community, where he helps out with, the entry guide, right? And, this was at the end of the trading day, but you can kind of take a look at these expected moves and place yourself where even right now, 2x the EM high is actually getting tested, but very rarely does that happen. But if you're just on the put side, you're on the right side of the trade and you win, just like with what I did. But overall, right, you have to have a good thesis for why you're on what side of the trade. Like I mentioned in the previous video, I'm not the biggest fan of just slapping on an iron condor. You'll see that strategy with a lot of option sellers and a lot of other short-term people. I don't love those condors, but the main reason is you have to be exactly spot on, right? Now, granted, unless you're running a very tight, risk 2 to make 1 iron condor strategy to where, you take max losses all the time, but more often than not, you're winning and you come out up, 8% on the month that way, go for it. That's awesome. But what a lot of people do is they make really, really wide iron condors, like 30 points wide, and one side just gets blown out, and they might have been risking $3,000 to make, $50 or $60, right? Like something that's really wild for like risk to return. And yeah, if you just hope and pray that these strikes don't get tested, you will at some point get blown out, right? It's just, that's the mathematical probability. So that's why my focus has been being on the right side of the trade, which you have a 50-50 shot out of the gate by just putting on one trade or the other. If you look at how often we're red versus green and red side or green side, right? It's just like very similar to the casino and roulette, right? It's, sometimes it'll fall on black, sometimes it'll fall on red is how the green and red days go. But you can kind of set your criteria around that. The best way to find, which day is going to be which based on tracking your major support levels and then looking at the expected move math, which I showed here, right? And I've mentioned this a million times before, so I probably sound like a broken record to people who've been watching the channel for a while, but you can look at trades, right? If the market hits the EM high, you can throw something on. If you get up to the 2x the EM high, you can throw a call spread on way up here. And, you get the odds out of the money on this. This is just odds based. Like if you were taking trades and letting them go to expiration, that would be your minimum credit here. But if we take a look back here, where's the VIX? And the VIX being at 13, which is step number 3, makes me realize that there's not a lot of fear in this market. But at the same time, right, you have to look at how far extended downwards the VIX is as well. Even when we had that push down in October all the way to, this was the low point of the bear market, right? It was mid-October. You still even got down to 19 and popped back to 25, right? You were hovering around 20 quite a bit and would pop back to 27. So I wouldn't even be surprised if we got sat down to 12 and popped back to 20 for a little bit. Not saying there's any like rhyme or reason for why that would happen, whether it's economic data coming out, right? And inflation could start to get a little bad again, which signs are not pointing towards that, right? We're starting to see the follow through of the Fed's tightening on the economy where rates are super high. So borrowing money's tough and expensive, and nobody wants to borrow money when you have to pay a bunch, right? Like pay a bunch of interest and then also deal with higher payments, which suck. And to try to build your business when the economy is not super strong is tough because people hold on to their money a little bit more, which just isn't fun for everybody, right? Because they're operating off of fear, and money shouldn't cause you these intense emotions all the time. You should hopefully have a nice balance in your life with it. Like I'm probably going to take the did we exceed the expected move off the list because I honestly haven't been using that very much anymore. That was a lot more helpful for 0DTE trades specifically. I posted these levels throughout the week and I reset those levels at the beginning of every week for what my major support levels are. So, because we're in a bull market again. So what I'm looking for to take any call credit spreads is any sort of extended move. So this is a great example. Today is a perfect example, up 1.3% after being up the whole week. Now we're getting extended. But now that we're in a bull market, I'm going to look at staying on the bullish side. So I'm going to wait until we get to support to take those put credits. And anytime we get extended, we take the call credits. And if I don't have a setup, I don't trade because I don't want to give my money away to the market makers just because I felt like I had to put a trade on that day, right? So, you have to find that edge, right? You have to feel like you have your edge on the markets so you can continue to make money over the long term because that's all that really matters. I think if you're in trading to try to make a lot of money in 3 months and then stop forever, you're going to find that, your time might be better used somewhere else. So, totally up to you, of course. But if we go back to position sizing, 6% is what I've been rocking with, 6% of my account. Like I said in the last video, if you get like 7% return on a trade over, with 6% of your account at risk, or even by, that's close to 0.45% growth. Do that 5 times a week, you're up 2.5% on the account in a week. Trade timing, that's another really big thing that you have to focus on. I always wait till 2:30 or later. That's honestly so we can have the full trading day go through, because you'll look, if you put a swing trade on in the morning and you don't have the direction right immediately, even if it's a chop day, you could have waited till 2:30, put that trade on, and then as we go through power hour and get closer to close and into the open on Monday, you have all that volatility decay, even if the market, right, that time decay as well, just because there's less time for that trade to be open. And then you can either let it go to expiration or take it off early, depending on how you feel and what your setup was. For me, I roll my options. As you guys can see, I took a rolled position before I took any sort of bullish or bearish switch on that trade, or stopping out, of course. That was just based on where we were psychologically and how much the market had pushed that day. It had 2x the EM, and I assumed we would eventually calm back down. So I just rolled it one day out. If we continue to get tested, I would have continued to push it up and out if needed. And then we'd start hedging on the other side to kind of reduce our risk on those contracts as well. And then setting expectations, I think, is the biggest thing when it comes to trading the markets. It's like, look at what most investors look for in 1 year, which is the 8 to 10% benchmark return. CDs are giving out 4.5, I think, right now. Maybe you can get 4.75 at a good bank like Chase. Big bank. I shouldn't say good. I don't think the banks are very good. I guess you can use air quotes when we say good about the banks, but I know a lot of crooked bank people. So I know a lot of great bank people too. So it really comes down to the person at the end of the day. But in my head, at least, I think there's a very big misconception in the options trading world where, there's Wall Street bets, which is like the biggest wins and losses that there are possible, right? Which are always very extreme cases that make you feel like, why didn't that happen to me? Why can't I buy, all the stuff they can, because they full sent their portfolio on something? But there's also the extreme losing cases, which is like, oh, I'm so glad that's not me. He had 40 grand in margin that evaporated on an earnings play or whatever, like, because it happens. Like, that is decisions people decide to make for their lives. So I think with setting expectations, if you could just focus on even like a small percent growth per month on your account and still maneuver through the volatility, but also like keep yourself mentally well. Because I think that's one thing. Me looking back at my 0 DTE run from late last year to early this year, before I switched to more multi-day, I remember there'd be so many days where I just felt like I had to stare at my phone or computer. And that's another reason why I like the longer term trades, is I'm able to be in a really solid mindset for those. So that is going to be everything for me in this video. I hope you guys get to enjoy your long weekend. I have a couple other videos I'll be posting over this holiday, but I really look forward to seeing what you guys bring to the table with your trades. You guys always keep me posted down below and in the Discord. So that's going to be everything for me in this video. You guys are incredible. I hope you guys have a great weekend, and I'll see you guys in the next one.